Ladies and gentlemen, good day and welcome to the Multi-Commodity Exchange of India Limited Q1 FY22-23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. On the call we have today Mr. P.S. Reddy, Managing Director and Chief Executive Officer, Mr. Manoj Jain, Chief Operating Officer, Mr. Satyajit Bolar, Chief Financial Officer, Mr. Praveen DG, Head Investor Relations. I now hand the conference over to Mr. P.S. Reddy, Managing Director. Thank you, and over to you, sir.
Thank you. Good evening, everybody. Thank you for once again showing interest in the company and its growth story. As exchange this quarter, we have done relatively better in the light of whatever that has happened in the previous quarters. And options turnover has picked up substantially well. And in the month of, for this quarter, it was about 19,500 crores. And in fact, in the month of July, you will be surprised, it's almost all 27,400 crores. And I think that's a good, and we are on a good growth path, and hopefully we will be able to see sustained growth in these contracts. While these contracts we are trying to nurture and then bring in more participants. We would also be launching new contracts as and when we get the approvals from SEBI. I have nothing much to say because I do not want to take time in explaining this. Our results are out there. Many of the data points are already there. So I will keep it open for the participants to raise questions. Please.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Kindly press star 1 to ask a question. The first question is from the line of Prashant Shah from RG Investments. Kindly proceed.
Good afternoon, sir. Am I audible?
Yes, sir, you are audible.
Since BSE has recently got the approvals for the EGRs, any update with respect to the same?
EGR, we can get an approval, that's not an issue. At this point in time, we are still in the development of the technology platform. But nobody has started any trading because there are some GST related issues are there. Unless that is resolved, interest will not be seen growing in this. So let that GST issues be resolved. We are not, in that sense, delayed.
Okay, sure, sir. Thank you very much. I'll be in the line.
Thank you. Participants, if you wish to ask a question, please press star 1. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Kindly proceed.
Hello, sir. Sir, I have 2 questions. First question on the pricing. So can you just remind us when was the last time when we had taken a price hike?
It was in 2018, and we have introduced pricing in options only in October 2021.
Yeah. So I'm talking about the pricing in the futures only. So
Yeah.
when do you think next pricing revision is due, and which authority approval we will be needing? And just to give some comparison, like BSE and NSE charges about like 300 rupees per 1 crore, and we are still like 210, 215. So any possibility will be bridging that gap, or will be given some inflationary price hike given that 3-4 years has gone past? So what is your thoughts there?
See, we are still in a developmental stage of our platform, okay? And many new products are being brought in. We are looking forward to many algo players to join. For algo players, incrementally even one paisa increase also makes a difference, okay? And so if you, going forward, you will see there is, as we go along, we will discuss, the concentration is increasing in the form of algo players. And new algo players have joined. That is the reason why we are very conscious about it. Actually, they are looking forward for a reduction in the charges. Okay, so I think I do not want to stir the honestness at this point. I would like to stay cool there and increase the volumes and also increase the number of products that are being traded on the exchange.
Okay, understood, sir. Just the academic part, you are free to increase prices, right, if you require today?
Of course, we are free, but then, we need to take all stakeholders into consideration. That's right.
Okay. My second question is on the TCS platform. So we are still confident of up and running from September onwards?
Well, there will be a delay in that. The delivery has happened by and large, but then a lot of bugs are there. That fixation is going on, bug fixation. And we need to give a clean mock run, okay? So that will take some time. So we have different alternative plans. I don't want to disclose them, but all alternative plans are being, worked upon. That's the way it is.
Okay. So I just, when you said, hello?
Yeah. I know what I'm saying is that alternative plans, it's not going to be a substantially delayed. That's the way it is. Maybe another 3 months time, we should be able to close it. That's the way we are looking at it at this point in time.
Just to make ourselves clear, so like last year we had about 64 crore software support charges and product license fees. So let's say in FY24, I'm assuming 3 months delay and maybe probably 1 month, 2 months here or there. But in FY24, this cost should be drastically down, let's say maybe 64 crore, maybe 5-10 crore.
See, there are two aspects of it. One is the cost of it. So as a direct expense, that will be lower, but as a depreciation will go up. Okay, one line item may come down, another line item may go up. That's the way I'm saying.
No, I agree with you, but am I on the right track in terms of numbers?
No, I will not give any numbers because we are not giving as yet any numbers. But I can tell you it is substantially lower. That's all I can tell you that.
No. So I'm not looking at TCS cost component, but whatever we are paying to the FT, the erstwhile technology provider, that number will be zero, right?
Yes, that will be zero, obviously.
Okay. Understood. Thank you, sir, and all the best.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Devesh Agarwal from IIFL Securities. Kindly proceed.
Good afternoon, sir. Firstly, sir, you spoke about algo concentration increasing in the futures trade. So is that the reason, despite our volumes are declining on a YOY basis, the tariffs are kind of coming off?
No. The average realization may be coming down because we have two tariff slabs, and people fall under algos generally on the higher tariff trade. That's
Okay, so despite volume declining, the concentration is kind of going up.
Higher means, what I mean is when a slab 1 is a higher tariff and slab 2 is a lower tariff, so they are moving up the ladder. That's the way it is. So that is up to 350 crores is 260 rupees, and over and 350 crores is 1 rupee 75 paisa per lakh.
Right. And sir, if you could share the concentration of, say, the top 10 traders, what would be their concentration in the overall volume?
Yeah, it was about 48%. Now it has gone to 56%, if I am not mistaken. Yes, 50. Top 10 is 67%.
67%. And how much this was last year?
For the entire year, it is 62%.
62%. Okay. And so what has been the revenue from options in the quarter?
Revenue is 27 crores CR.
27 crores. Okay.
Yeah.
And you spoke about, sir, technology migration. There been 1 quarter delay. So now we are target somewhere in Jan, this migration to happen.
That will not be Jan. This quarter only I am looking at it. Next quarter only I am looking at it.
And in the meanwhile, we'll continue with the FT platform.
Well, we are looking at various options, including FT platform. That's how way I say it. We have 3-4 options we have looked at, and we're working on all options simultaneously.
Okay. And by when shall we get clarity on this?
I mean, we should get in about a month's time. I mean, that's not an issue. That TCS said that they will deliver by the end of August. Complete suit. I mean, this is whatever bugs are there and all that, so that we will be able to give a clear mark to the market participants. We already given mark in pieces, but some bugs were reported. Those ones are being addressed.
Right. And couple of accounting questions, sir. What has been the end-to-end loss this year in this quarter?
When we went in May we had, May was a washout month because RBI increased rates in May. But June we recovered, and what we have done is, we have moved from a mutual fund, because basically our mark-to-market was not substantial, because we had parked it in ultra short-term and short-term funds and overnight. So we have now started moving to state development loans, which will be accounting under the amortized system. So that is the plan forward. So we have already started this, and during the month after the RBI policy, we'll get better clarity. But the accounting for these instruments in our books will be under the amortized system. So we won't have any mark-to-market on these instruments.
Understood. And so this time taxation, like last year, you said that all the adjustments will be done in 4Q. Are we following the same practice, or this year we'll be doing the adjustment as we go along?
No, we'll do it the same way, but I'm glad to tell you that we have taken the full MAT credit, and so we're under the new regime. Our effective tax is around 24% for the standalone and around 20% as on a consolidated basis.
Oh, we've been able to completely utilize the MAT.
Yeah, that's it.
Perfect. That's all, sir. Thank you so much.
Thank you. The next question is from the line of Savi Jain from 2.2 Capital. Kindly proceed.
Hello, can you hear me?
Yes, we can.
Hi. First question was just a follow-up on that, on the expenses for the new software. So you said that while the expense will go down, the depreciation will increase. But the sum total of both, will that be less than the total expense that we're incurring right now?
See, presently there's a fixed charge as well as a variable charge which is linked to our transaction charges.
Correct. Yeah.
There's nothing linked to our transaction charges.
Yeah, but of the first.
No. Again, it means what? Higher the trading and higher the transactional review, correspondingly you don't pay anything. So obviously that will be less. There will be what you call a tipping point or a balancing point up to what turnover both will be equal, and up to what beyond which that one will remain the same. So that kind of thing will happen.
No, I understood that, but based on the current levels of ADTV, we assume the same levels. Will the expenses be similar or will it be lower? The depreciation plus the fixed charge, will it be lower than the current fixed plus variable?
Maybe somewhat lower.
And what is this? Is there any update on that FPI participation? When do we think we can have them, on the trading on the?
SEBI is drafting the regulations. Once they are done, then they will release it. The circulars, rather. It's already announced, no, by SEBI. That you are aware of it, by the way?
Yeah.
Yeah, SEBI has announced it. Now they have to give the circular. Operationalizing it. Yeah.
Okay. Yeah, that's it from us.
Thank you.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Kindly proceed.
Yeah, hi sir. Thanks for the opportunity. So my question is on the options volume. So as you mentioned that the options volume has picked up significantly, but if I see the constituents, still 95% or 90% is crude and like natural gas in that, and we have launched the this gold mini contract, but but that is also not picking up, right? So from here on, what we can expect on the option side, whether it will be dominated by these two contracts or maybe other contracts will also start picking up. So if you can like throw some light on what we're doing to build like the other contract, and also on the index options contract which has been allowed by SEBI. So maybe you can tell when the contract will be launched and like what kind of traction we're seeing in that.
Okay. You see, currently these two are the darlings of the market, crude oil and natural gas. So obviously those two options are doing well. And in the case of gold, although gold mini is launched, the volume substantially because the is in the main 1 kilo gold, and these contracts, these options will devolve into the underlying features. So that is the reflective. The volume is also reflective of that underlying features volume. Gold mini options volume is also reflective of the underlying features volume. We got SEBI's approval for launching monthly options in 1 kilo gold bar on the underlying bi-monthly features. Currently, gold 1 kilo is a bi-monthly features contract. So, as a result, what will happen is the tenor is reduced. The premium will be halved. So that is the new thing that we are looking at it. We will be launching that product soon.
Okay. And so in terms of participation in the options volume, if I see that in terms of the participation details that you have given in the PPT, there is a substantial
louder, please.
Client. Yeah. So am I audible now?
Yeah.
Yeah. So in terms of the participation details that you have given in the PPT, so the client participation has increased substantially like YOY. And if I see in the options contract, so is it fair to assume that options volume is largely being contributed by the retail like client, and also in terms of the UCCs that we have seen, it has increased significantly over the last 3 years, almost 4x. Now around like 1 crore active UCCs are there. So out of that, how many would be trading options? And is it fair to assume that options is largely a retail participation that is there?
Okay. See, in terms of options, there is 1 minute. Yeah. In terms of options, last year we had 1,72,900 odd investors have traded. In this first quarter alone, we have Q1, we have 1,19,500 traded. So the trend is really interesting. But if you look at again, the corresponding Q1 of the last year, it is only 32,000. Okay. So there is a huge difference. So we are really doing well. Here you must see option writers are by and large some proprietary account is happening, but option what you call buyers, whether put option or call option, they happen to be the retailers. That's what we have seen that.
Okay. So, like what you're saying is that out of the 1 crore active UCCs, around like 1.5 lakh is only trading in options. So there is still scope to increase the retail participation in options. Right? If I'm correct, in this?
Yeah. There is scope.
Okay.
There is scope.
Okay. And also, sir, in terms of the options, earlier, if I remember, you mentioned that options realization is around like 1/3 of futures. But if I see, based on my calculation, the options realization is coming at around 53% because because the options premium to the options notional is around 2.6%, which we were earlier assuming it to be around 1.5, 1.6%. So is it fair to assume that this is going to come down, or is it going to remain at these levels only?
Okay, it all depends on whether options are traded near month or far away. If it is far away, obviously the premium will be much smaller. Out of the money or in the money or at the money, this kind of thing. And mostly it is happening near money or around that or in the money. As a result, you will see high premium is being paid. And as a result also, return is almost all I have seen the 48 to 50% it has come. But what we have calculated at that point in time is based on what was happening in NSE. That is what the calculations were. And fortunately, we proved to be wrong. So we are getting more this one. But I'm not too sure whether that kind of spread will continue to be there. But even 40% is also there. That is also a good number. That's the way it is.
Okay. And sir, in terms of the technology shift that you mentioned that there can be some delays in that. So if I'm not wrong, the current arrangement is ending in September, and any extension there is not possible, or in case we have to extend, we have to do it for 1 year. So are we planning to extend for 1 year, or extension of 1 or 2 months? I think is not the case. So what are the alternative plans we have?
No, that's what I'm saying. I will not be able to disclose all my, what are all doing it, because nobody should play spoil sport to jeopardize all those things. But we have, one thing is, for all the existing licenses of the existing platform, we have in a sense, perpetual licenses. That means it may be for 60 years, it may be 40 years, 30 years, etc. So the license fees are all done. The only thing is, when there is a problem, troubleshooting is needed. That is where their services will be requiring it. So this is one of the contingencies that we are looking at it. Okay, approaching them to get their continued support for 3 to 6 months, maybe around. That's what our request is going to be. And that's it. There are other plans also we are having it.
Okay, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Kindly proceed.
Yeah. Hi, good evening, everyone. Just a few questions. Firstly, when do you plan to launch options on indices?
Sorry?
When do you plan to launch options on indices?
Debt indices?
No. Index. Option on indices.
Option on indices. Okay.
Yes.
Okay. No, you see, currently, except for BullDex, others are not doing well. Okay. We need to allow the underlying futures contract. If you want to launch it, then we must have a vibrant future and options contract. So we need to revive that. And MetalDex has gone almost all nil because of the nickel debacle that has happened. Now we are asking for a different trading lot and then what you call delivery lot for the case of nickel. Once that nickel is permitted, then the trading interest will come in. Then we will revive this metal index futures contract. So let us develop it first the underlying futures. Then we will apply for those options.
Okay. And also recently there was an allowance of FPIs being allowed to trade in commodities in India. How do you see this, and how do you see the benefit of this over the medium term?
I mean, it should help us to improve the liquidity in the market. That's the way I look at it. There are 2-3 things which I keep telling the other people also. For FIs, somebody can say that, look, they can also go to maybe London or CME. Why do they come to you? That is one question that people ask. But then the cash and carry arbitrage opportunities are available in the respective markets only. Sitting there, they can't enjoy that benefit. So there is an opportunity for participating that, okay, in this market. Second, there are people who are currently maintaining or who may be trading one book in the international leg, another book in the domestic leg, etc. Now, they don't need to have maintained 2 different books and do anything of that kind. They can always trade in one single legal entity, okay, and the liquidity will increase in the exchange to that extent. That's what I'm saying.
Got that, sir. Yeah. And so the other aspect was on electricity futures. When do you think we will launch that? Any further developments?
I shouldn't be losing my patience on this, but I think, we are tired of it. That's the way I can tell you that. There's no day goes without discussing electricity futures contract being allowed to be launched. We are waiting for the regulatory approvals. Hopefully, this quarter will happen. Let's see.
Okay. And then my last question is on the TCS software again. What is the capital cost of it, and how much what is the kind of lifetime of that asset, so that the depreciation will be what, 3 years, 4 years?
See, what our contract with TCS is 1 + 5 years. Okay. Then as far as the software usefulness or what usage is concerned, it's a lifetime. As long as we continue to pay them the AMC, that is what this one is. So you just pay the AMC, then keep using it. That's the way it is.
And so, what will be the capital cost of it?
No, we are not disclosing it as yet. Okay, we will do that after maybe going live or something like that. I do not know when CFO would like it to be disclosed, but anyway, it will come in the books.
Okay. Got that. All the best, sir. Thanks so much.
Thank you so much.
Thank you. The next question is from the line of Lavanya Totala from UBS. Kindly proceed.
Hi, sir. Thanks for the opportunity. Most of my questions are answered, but I just wanted to check on software support charges. So, is this like the software charges are linked to option volumes, but our revenue is linked to option premiums? I just wanted to check if.
I'm sorry, what is the software related? I didn't understand.
Software support charges, which is higher in this quarter. Wanted to check the reasons behind why it is higher.
You see, it doesn't distinguish between options or futures. Every rupee earned, a certain percentage has to go to the software vendor. That's the way it is.
So it is on our fees, not just on the option ADVs, right?
Nothing to do with options. I mean, nothing to do with any of those tariffs that we structure for each product. If you don't charge anything, then they will also get nothing. But if you charge something, you have to pay out of it a certain percentage.
Okay, got it. And on the staff cost, will it be the same run rate which we are having in the quarter one, which is a bit higher?
It is partially higher because a lot of attrition is there in IT sector and other thing. Some kind of corrections have to be done, and some hiring also has taken place because this of the implementation and other thing. But I think once the project is goes live, maybe after 2-3 quarters later, it may start taper off. I mean, you will see some kind of a downward trend, but not so much, and but there will be some stability in that number.
Okay, got it. And on the new product launches, so other than the electricity futures and other this thing, what are the new products or new commodities that we are looking to launch in the near term, sir?
Look, approvals are pending. That is the whole issue, as I told you. Approvals are pending, and there is no point in repeating the same thing every quarter after quarter because I'm waiting for those approvals. No response has been received, and but this time we are we are determined to get them to give. Whichever way it is, if they want to reject it, let them say why they are rejecting it and then reject it. I have no problem about it. At least some other product we can try. But once we get the product approval, then we have to launch it within certain period. So that, as I said, that we will launch now gold options on the 1 kg contract, one bi-monthly futures. So that is something which we will take it up in this quarter.
Got it. Thank you so much for the opportunity, sir. Thank you.
Thank you. The next question is from the line of Nikhil Abhyankar from DAM Capital. Kindly proceed.
Thanks for giving me this opportunity. I wanted to know what will be the effect of IIBX on our turnover. Will there be any substantial effect to us?
See, IIBX is promoted by all 5 of us, and we all have equal 20% share. So now that it is inaugurated, and their tariffs are also announced, and our estimates suggest that it's going to do well. So it's like that.
Okay, so you don't think it will directly impact our volumes?
You mean to say volumes, okay?
Turnover, yeah.
Volumes, yeah. In terms of volumes, I would say it will, if at all there is a effect, it will be a positive effect because the guys who are importing the gold, they have to hedge that exposure also. So exchange is used for such kind of risk management.
Understood. Okay. And sir, you just spoke about spot exchanges earlier. So we are planning to launch gold and I think coal spot exchanges. So what do you think will be the percentage as compared to the India's total consumption that will be traded on our platforms? What is the global average and where do we see going once we launch?
See, it is a more a hypothetical question in that sense.
Yeah.
Or people may have made those assessments, but the way that we looked at is, especially coal for spot exchanges, the government has leased out mines which are shut down and which are due to unviability in terms of public sector assessment. Now, the private sector has picked up on a PPE model. They are going to produce coal. Now, that is completely free from any kind of government shackles. They can sell it in the open markets. In fact, we have seen about 20 coal mines were auctioned when we went one conference, and there are about 120 or 100 plus, if not 20, which are still to be auctioned. So all that coal will come. Now, while it is tightly controlled, currently there is about 5% or so. It is coal traders are using it. Some captive mines are also there. They are also allowed to sell coal in the open market. So we are assessing all that. We don't need the entire Coal India production to come to us. You know, they have commitments to various state government entities. They have to give it. So they may not come over there, but we are sure that this coal spot exchange will do well once it is permitted to be launched. This is one part of it. Second part of it is the gold part of it. While gold spot exchange is something that we all are awaiting for, GST constraints have not yet made it a viable option. So that's why everybody is holding back. Even BSE said that even two years ago, when my announcement came by Dhanteras we launch whatever it is they said, and Akshay Tritiya, nothing happened. Because there are constraints, we understand that better than anybody else. Now, if the gold spot exchange comes, maybe the synergies between MCX futures gold contracts and spot will be much higher than anybody else, because it supports each other ecosystem, and the margins and other things can be moved easily, and people can take exposure in one and then contra position in the other, etc. So I think we will not let that opportunity go, but it's too early for us to apply. That's the reason we are waiting.
Understood, sir. And just one last question again. I just wanted to know what are the costs that we pay to CME for the licensing of the underlying, and India has also got a spot gas exchange now through IGX. So is there any thought to move to it?
No, you see, the one which we are trading is in the WTI, and gas is of Henry Hub. That is what the pricing is all about. Now, we are paying to CME about 2 million USD. That is a minimum. And if the turnover, say approximately, let us say it is 16,000 crores, then there is a break even. Then beyond that, we have to pay that incremental. So this quarter we have paid extra to CME because the crude and NG has done well.
Okay. Understood.
Understood what I'm saying?
Understood. Understood. And there is no thought of moving to IGX, so that we can, if there are any costs to be saved in it.
This is not as yet highly liquid or anything like that. Some of them currently it's happening, what you call a reporting kind of thing is happening. It's too early for us to say that the NG has moved over to the domestic platform. Okay, because there are state what to call it's not under the GST purview. Okay, still VAT is ruling this NG market, so that is a challenge. And the transferring the gas or transporting gas from one consumer to the producer, etc., the entire pipeline is under the control of GAIL. Now, unless that is separated, there won't be any fair pricing of it.
Understood, sir. And sir, is it safe to say that once we launch the gold exchange, our futures and options will be, the underlying to it will be our own spot exchange, and will be saving certain amount of money for our licensing deal with LME?
I'm sorry, how is LME coming into the place?
I'm sorry, but sir, what is the underlying for our gold futures?
Our gold only, domestic prices only.
Okay, my bad.
We are not paying anything to anybody. Yeah.
Okay. Thanks a lot, sir. That's it.
Thank you.
Thank you. Participants are requested to restrict your questions to 2 per participant. The next question is from the line of Sanket Godha from Spark Capital. Kindly proceed.
Yeah, thank you, sir. Just wanted to understand this nickel part a little better. So you said that maybe subsequent quarters it might be relaunched. So where it is got struck and if it comes back, whether it can potentially contribute the same amount of volume it used to contribute in the past or not? Because so that's the first one. Then I have a second one with respect to depreciation and tax. Yeah.
Are you talking about the nickel contract?
Yes, sir, nickel contract. Yeah.
Okay. See, the nickel contract currently its value is almost all 38 to 40 lakhs of rupees. Okay, with a margin of 20%, it is too expensive for anybody to trade in this contract. So we have informed SEBI this is what the issue is, and investors are deserting this counter. So unless you do something about it, it will die natural death. So I mean, unless you have a strong merit in being trading unit being different from the delivery unit. Now there we don't see any merit in it. So I think that is something which they are considering it, and let us see if it happens. There is nothing like it.
So you expect the margins to come down in this particular product so that the volumes will revive back. That's the way you're trying to see.
That's right. No, the very trading unit itself will be 1/3 is what we are looking at it.
Okay. So you're looking for both the benefits. One is the trading unit size to come off and the margin on that amount to be lower.
Will be much lower. Yes, obviously.
Okay, sir. Second question, sir, was more on this. I wanted to understand, though it's a small number, the depreciation in the current quarter came relatively higher compared to what we reported in the fourth quarter FY22, which was 2.7 crores, now 5.8 crores. So is it some change in our approach in calculating depreciation which led to that increase? Just wanted to understand that part, sir.
Not really. If you see our previous quarter, June as well as till December, it was at the same run rate. But when we reviewed it in March, we decided that there are certain assets which we could, continue using. So that's why we reversed certain depreciation amounts in March. That's why for the year as well as for the quarter, particularly for the quarter, the depreciation is a bit lower than the current quarter figure.
So this 5.8 crore kind of a run rate is continuing to remain for some time.
Yeah, that's right.
Okay. And finally on the tax rate, sir, you said 20% is the tax rate on Concall numbers.
That is on a consolidated.
Yes, sir. Sorry. But from
for the standalone, it's around 24%.
Okay. So on Concall basis, it will remain at 20 only for subsequent quarters too, after utilizing everything with respect to MAT.
Yeah, at least till I don't foresee any major change till March, because whatever adjustments we'll do it in the March quarter.
Okay. So we can work with 20% tax rate, right, sir?
On a consolidated basis.
Okay. Perfect, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Raveen Kurwa from ICICI Securities. Kindly proceed.
Yeah. Hi, sir. Thanks for the opportunity. 2 questions. So one was on the cost side. So is it fair to assume the employee expenses and the other expenses to remain at the similar rate for the remaining quarters of FY23?
As MD explained. Hello? Can I continue?
Yeah.
So, there are a few senior level recruits that we have done in IT in this quarter. So I had expected to continue at this rate because they have also made provisions for certain in our HR cost. So the HR cost would continue. And when we compare it, when we compare the other expenses in, especially in March we had done certain reversals because, the variable pay is linked to the performance and all that. So when we came to March, we knew the exact figure, what we would be, realizing. So that's why there were certain reversals done in March. If you look previous quarters, it is in the same run rate.
So in the beginning of the year, the auditors say that you should do provisioning for the variable pay. So we do based on the budgeted thing. And actually, what is the performance of the company, what is the individual's performance, we see that, then we will find that there is this year, rather this year means 21-22, we didn't perform as per the budgeted target, so we have lowered it. So accordingly, that much is plowed back into the accounts.
So just in case that if our financial performance increases going forward, then we may see a higher run rate, right, for Q4?
No, whatever we have provided is considered to be 100%, and if budgeted targets are achieved, this 100% will be paid out. And if budgeted targets are achieved only by 80%, let us say that 20% will be put back in the account. That's
okay. That's really helpful. And then secondly, on the bi-monthly option side, so what's the view on cannibalizing the future volumes or option volumes by launching that option contract?
Which one you're talking about?
Gold 1 kg bi-monthly contract.
No, I don't think it will be cannibalizing it. I would say it will actually infuse further liquidity in that. It doesn't cannibalize. And the ones which are not there will start coming into the system.
And so one more last question. So if you can help us with only the active client database for the quarter. So who have been actively trading for last 1 year. If you can give us for the futures and options.
Futures and options, 1 minute. Last year we had 4,70,000. That is for the financial year 21-22. 4,71,000 you can take it. Okay. And this quarter 2,38,000 have traded.
This brings to our activation ratio in the range of like 3 to 3.5%. So I just wanted to get your views on how we will be increasing the active portion of the active ratio for the clients, and how has it been historically in the past?
See, if you look at the corresponding quarter last year, just at the beginning of the year, about 2,23,000 people have traded. Unique, 2,000. So as against 2,23,000, 2,38,000 have traded. That's almost how much? About 8%.
Right, sir. Yeah, that's an improvement, right?
Yeah.
Okay, thanks a lot.
Thank you. The next question is from the line of Sujit Jain from ASK Investments. Kindly proceed.
Yeah, good evening, Mr. Reddy and team. Sir, bank brokerages as a percentage of total turnover, how much that would be currently?
One minute. That percentage. किधर कैलकुलेट किया? तो calcium. Yeah, currently it is about 1,000 crores. Maybe it is 5% of it out of 25,000.
And similar number for options?
Options. 1 minute. I don't think I have readily available. I think this has not been taken. Yeah, we should take it. That also, please take it. Okay, that I probably will post it on the website if it is available. That we will generate it. We have not generated that. Okay.
Sure, sir. So which means that there is a good amount of scope here in terms of business development activity, in terms of active participation, because I'm sure that their participation on equity exchanges is much higher. So there is scope here in terms of improvement, isn't it?
Yes, yes. Well, I mean, our focus has always been on this bank broking. They are more stable in that sense.
And all the issues related with bank brokerages being active on commodity bourses, I mean, their clients, their customers being active, have they been addressed? Because I believe there were some issues related with the warehouse receipts, etc.
Not too sure about it, but then the KYC what they are doing is currently whomever they are admitting in the equities, they are uploading it on the equity on the commodities also. That's why our KYCs have crossed 1 crore now. Okay, total KYCs. You have seen that probably investor presentation may have.
Right.
So that is the way it is happening. But I will not be too happy with that kind of numbers. Okay, 1 crore, but even if 50 lakhs are traded, that is good for me. That is so we wanted to. Mere uploading is not enough. We wanted them to activate it. And commodities is also a peculiar thing, because unlike in commodities, which of them are, or most of them are delivery based ones, the investors are slightly reluctant to take any positions there. Now, recently, in order to popularize these commodities, at least they will be interested in gold. So what we did was, we asked some of the member brokers to take delivery across the country, gold, 1 gram, 5, 10, 8 grams, and 100 grams, etc., from the exchange platform, and delivery doorstep delivery is something which the vault managers have guaranteed. Okay, and with for some price, very very nominal price. So with that, we are bringing these clients of equity markets into the ecosystem. We thought gold is easy to reach out to them. Okay.
Okay. And as the margins in futures, energy futures come down, do you think that the options turnover could shift back to futures?
It doesn't. Once they got used to it, now in fact people prefer options than futures. That's what is happening. The ones who are actually looking at the newcomers, those who are from equities, who are active traders. But there are traditional commodity brokers. They are still prefer futures than options. And the physical market players also prefer futures.
Right. So your effort with the regulator in terms of bringing down the margins in energy contracts and futures, if that materializes, you're saying overall ADTV of the exchange will go up, the combined?
Yeah, it should.
Okay. All the best, Mr. Reddy. Thank you.
Thank you. The next question is from the line of Sanjay Singh from Fine Bridge Investment. Kindly proceed.
Yeah, hi sir. Thank you for taking my question. Am I audible?
Yes.
Yeah, sir. I don't know how to put it, but have you benchmarked yourself in terms of costs with other exchanges, whether in India or similar size exchanges elsewhere? The reason I'm asking this question is, if you see your cost, if you add up, your employee cost, tech costs, other expenses, even depreciation, because some of the accounting will be different in different exchanges. And today you have a cost of roughly around 220 crore, 210 crores on a base of slightly less than 400 crores revenue. And for the lack of more information, if I compare to IEX, which has a similar size of 400 crores revenue, they have a cost structure of 80 crores, and they also had a similar tech arrangement earlier, and they bought the software, and now they only charge depreciation. and they have a total cost structure including depreciation 80 crores. Now, of course I don't know your business very well, but if you have benchmarked yourself, or do you think there is any opportunity to benchmark yourself with other exchanges and look at the cost structure with a fresh pair of eyes, or do you think there's any possibility to reduce the costs significantly from what it is currently today?
Yeah. See, in fact, every quarter we place it before the board and audit committee, the comparison of the NSE, BSE, IEX, NSDL, CDSL, NCDX, etc. Okay. Even NSE doesn't compete with IEX in terms of EBITDA margins. IEX has 87%, NSE has 75%. And but for BSE, it was maybe 1 quarter behind maybe. You are doing March. Okay, March to March is giving it, and our EBITDA margin is 53%. BSE is 42%. Okay, and NSDL is 58%. CDSL 69%. So NCDX, I'm not comparing it. Of course, they are not doing well. So that leaves us only with BSE is only behind us. Others are doing relatively better. So because of our substantial technology costs, we are incurring some expenditure. Second, while our turnover is growing, our turnover related expenses have gone up because of that kind of what you call agreement with 63 months. Other costs, employee costs also partly increased because of the development of the new platform. We had to recruit more people in technology department, which we didn't envisage earlier because but then it will also taper off gradually. People will not have this exciting work in the exchange once the platform is developed and it is going live. So probably some may leave also. We do not know, but we will not like to increase the headcount. So once it is frozen, as they go vacate, maybe a lower designation person may be recruited. So coming back to these numbers, yes, we do the benchmarking with our domestic players.
Okay, that's very heartening to know. And maybe I think the margin percentage is probably maybe I'm wrong, but probably not the right way of looking at maybe the absolute cost, because even if your turnover grows, let's say 2x from here, your cost will not grow that much and your margin will increase. But the absolute cost of IEX being 1/3 almost of what you're doing currently, maybe you can explain in detail some other time, but I'm not able to understand. Technology roughly would be not very different. Your business development costs wouldn't be very different. Your other expenses, corporate overheads, and maybe you have some warehousing costs which they don't have. But still, how can it be 3x, more? I'm not too sure. Maybe there's some more details to it which you can probably share some other time. But I think more detail is not the percentage margin, but the absolute costs which should be looked at. If you can, maybe at some point of time, look at it and maybe
understand. See, we have multiple products. We have the development teams for doing all this. They are in a sense a monopoly. Okay, hardly anybody is there, and everybody goes there. And we have almost about 350 employees, and that's not the case with them. And system expenses is another one. So that's our total costs as a percentage of operating revenue is 58%, and IEX is 19%. Okay. And in the case of NSE, it is 31%. BSE is 74%. And we need to compare not absolute figures. I don't think absolute figures is going to give us those differences, number of employees, etc., etc.
Okay. And maybe I'm then probably thinking wrong. This other thing is, I don't know much about it, but how is this newly launched? What will the IIBX do differently from what you are doing? Is it more about spot gold there? If you can just explain me the difference of what exactly IIBX will do compared to what you're doing. I know you're doing futures and options for gold, but is IIBX doing more spot, or I'm not too sure.
Yeah, it is nothing but a spot exchange. Instead of going and then trading in London, maybe LBMA platform or somewhere, they would like that business to move over to India, and not just the domestic, but even other players also wanted. They wanted other players also to come to India and trade on IEBX, and it's purely a spot platform. Okay, and there's no. It is a dollar denominated contract. There will be no CTT, STT, and no GST, etc., etc.
Okay.
And it will be held in a demat form. They don't worry about the keeping the physical gold also. And whenever they want to bring in, they pay the customs duty. Pay the custom duty and get it. That's it.
Thank you very much for the explanation. And it's really heartening to see the volumes improve, especially in option side and the overall volumes in July compared to what we've seen till now. All the best for the future. Thanks.
Thank you.
Thank you. Ladies and gentlemen, that would be the last question. I would now like to hand the conference over to Mr. P.S. Reddy for closing comments.
Thank you so much for giving us a patient hearing and listening, brother. And we always set our aim high, and markets should also cooperate with us. Then obviously we'll be able to still do better, and we will do everything to have this company going good and doing well from quarter on quarter. Thank you. Thanks to all.
Thank you. On behalf of Multi Commodity Exchange of India Limited, thank you for joining us. You may now disconnect your line.